Welcome back. You're with Power Lunch here on NDTV Profit, and I'm very pleased at this stage to welcome Vivek Gambhir, Managing Director at Godrej Consumer Products Limited. Mr. Gambhir, thanks very much for joining us on NDTV Profit. Pleasure to have you on the channel. Let's get straight to it. First, when you look at this fourth quarter, what, to your mind, are the highlights beyond the numbers?
Good afternoon, Manvi. Pleasure to be on your show. Clearly, what has worked very well for us has been a continued focus on volume growth. And across the entire year, if you see, every single quarter, we've delivered industry-leading volume growth. And even in this quarter, it was 9% volume growth in India. And for the year, it was an 11% volume-led growth for the year in India. Apart from that, if I look at our performance across our international markets, we saw a recovery in Indonesia. Africa and Latin America still continue to do very well for us, and the profit story has been equally strong with a 23% growth in net profits for the year.
Okay, one could argue that perhaps the margin improvement could have been more remarkable given that you had the benefit of lower input costs, but I see that you've leveraged the input cost easing on to offer more discounts, particularly in the soap side. Is that assessment adequate?
Yeah, I think clearly, these are calls we have to take every quarter. And I think our strategy is to ensure very strong EPS growth for the whole year and to ensure that every quarter our profit growth is in line with our sales growth. Some of the investments keep on changing every quarter based on the pace of new launches and the kind of innovations we are backing. So ultimately, I think as I look at the whole year, which is very important for us, I think profit growth has been very strong.
Domestic market versus international market. Break down the growth rates here so that we get a sense of your hedging strategy per se.
So domestic growth for the year was, about 11% volume-led growth, 9% growth in overall sales. International growth rates were at about 14% on a constant currency basis. In quarter four, international grew at about 18% on a constant currency basis. So both, I think the volume growth in India has been strong. International growth, what is great, has been pretty broad-based with good growth in Indonesia, in Africa, and in Latin America.
And if you had to sort of slice the performance looking at, personal wash, hair care, and insecticides, how does the picture look?
In both insecticides and in hair colors, we have gained share. Both businesses have been doing well for us with high single-digit to low double-digit growth. In soaps, volume growth was strong in low double digits, but in soaps, we did have a lot of promotions. And so from a value growth perspective, I think soaps value growth was -6%. But at the end of the day, the palm oil prices have given enough cushion to all the players to be able to try and pass the benefit on to consumers to drive volume growth.
Again, I'm coming back to the overseas markets, Indonesia, Latin America, Africa. These are not markets that we follow closely, which is why I'm going to rely on you to project which could outperform, which could underperform. Give us a sense of what FY17 geographically could yield.
For us, as we talked about this, we delivered about 18% constant currency growth last year. Our effort would clearly be to deliver better performance and higher growth in our international markets. A couple of things will work in our favor. One is growth rates were depressed last year in Indonesia. And as the macroeconomic environment improves, about a third of our business comes from Indonesia. So we will benefit from a further uptick in consumer demand, and that should lift the overall growth as far as international is concerned. Our Africa business is scaling up nicely. We've also announced a new acquisition in the US to leverage for the African market strength of nature. So we will see additional benefits from that acquisition as well. I expect international actually to become a larger part of our business next year. But a combination of all of these factors with improved performance in Africa, the benefit of our US acquisition, and further uptick in demand in Indonesia should hopefully enable us to better our performance next year.
And you're talking about the macro environment improving in Indonesia. The same could potentially hold true for India as well. And of course, we all circle back to the expectation of an above average monsoon, but that is fundamental to your business.
Absolutely, because I think in India, you've seen a gradual pickup in urban. The challenge in India really has been in the rural sector. So over the next 3 to 4 months, we don't expect any material change as far as demand is concerned. So I do expect demand to still remain somewhat challenging over the first 1 or 2 quarters, assuming that you have a good monsoon. And as you start seeing the impact of the government's increased thrust on rural, our expectation is that the second half of this year will be much better than the first half of the year. And net fiscal year 17 should allow us to deliver a better performance than what last year did.
We haven't had a chance to talk since the Strength of Nature acquisition, which is why I'm going to urge you for a moment to describe what it brings to the table.
Strength of Nature is one of the leading brands that serves the hair care needs of women of African descent in both the US, and they already have about 30% of their business focused in Nigeria and Kenya. So we have been the leaders in hair extensions in the African market. But our strategy is to start serving and catering to the complete hair care needs of women of African descent. And we are already the largest player globally to serve those needs. Strength of Nature will really allow us to turbocharge, creating a platform that can start serving the needs of hair care for women of African descent, both in Africa, in the US, and in other parts of the world as well. So we're very excited by the potential of this acquisition.
And it begins to show up in financial terms when?
It should start showing up next month itself. So you will see the benefit of 2 months in Q1 itself.
Okay. I'm taking a step back and trying to find, the one perhaps concern area that observers and investors and analysts seem to pick out, and that is your higher working capital needs. Just give us some sense of how that could play out in FY17.
The good news is in India, our working capital has always been negative, so it's managed very tightly. We have seen some working capital pressures, particularly in markets like Africa, where because of the economic situation, our teams had to hold slightly higher levels of inventory. And because of currency devaluation, we did see some pressure in receivables. But I think this is just a one-off. Starting this year, we will put a lot more focus on working capital, and you should see significant improvements in working capital this year itself.
And Mr. Gambhir, the opportunity doesn't always present itself, which is why I'm going to ask, and I know that there are limitations on how you can respond, but the acquisition strategy of Godrej Consumer has been an interesting one to watch. Is there room for more?
Absolutely. I think we are still in the midst of a very interesting transformation to become a global leader in emerging markets FMCG. We do see further opportunities in Africa. We do see further opportunities in Indonesia as well. And hopefully we'll be able to try and find some acquisitions in India, which has been elusive to us over the last few years.
Would it be fair to say that these would be around, hair care, personal wash rather than insecticides, or is that not really a fair statement?
For us, I think anything within home and personal care, as long as these are strong brands in leading market positions, that's very important for us. But within home and personal care, everything is fair game.
Vivek Gambhir, thanks very much for joining us on NDTV Profit. Always a pleasure. Wish it were less rare. Thank you once again. We're going to take a break now.